and welcome to Talking Business. This is the 7th installment of our 8-week series of conversations with consultants and small business owners in the wake of the pandemic, and sharing experiences and information and education on ways in which businesses have strengthened, been creative, have sought to educate themselves in this ever-changing landscape of information that's coming down the pike. Today's session, I'm super excited because it is a perfect example of daily changes in the programs that have come from the Treasury Department and the SBA, notably the PPP loan forgivability program. And just recently, as we'll be talking about today, the Senate just passed the PPP Flexibility Act, which has a lot of implications for those small business owners who have taken out a loan, as well as some of the emergency loans. So my name is Angela Atkinson. I'm director of the North Metro Small Business Development Center. We are housed at Front Range Community College in Westminster. And for those of you who don't know, the SBDC's, our mission is to support small businesses in a startup phase as well as growth. We offer free one-on-one consulting. So we have a cadre of experienced consultants like we have here with us today. We also offer low cost and free workshops and webinars. Check us out at North Metro SBDC and book an appointment with one of our consultants. I'd like to introduce two of them here today. Karen Patel is one of our lead consultants. I'll let her share with you a bit of her background. And we also have Lauren Kmetz, who is a CPA and a financial accountant that helps small businesses with the accounting side and their books. So I want to share with you, there is on the panel, a little bit of housekeeping on the panel on your screen. There's an opportunity for you all to ask questions. So we will be saving time at the end for those questions, or we may just interrupt these guys and ask a question if it seems really relevant for where they are in their presentation. So with that, I will turn it over to Karen and Lauren, and thank you all so much.
Thanks, Angela. I just want to congratulate all of you who are on this webinar today. You're either here because you really do like numbers a little bit, like we do, or you despise numbers and you have no idea what's going on. So I want to let you know that I love numbers. Lauren, you love numbers. So the good news is there's people like us out in the world who actually do like the numbers, so you can focus on your business and we can focus on the numbers to help give you those resources and information. And at the end of the day, for you to be able to make a better informed decision. So my background, I've been in the financial services industry my entire life. I do have an accounting degree, but I, unlike Lauren, did not choose to sit for the CPA. But I've been a banker, a lender, I've been quite busy, and really my heart goes out to all of the business owners who are trying to figure this out in this economy. And Lauren really will have some good bit of information on really understanding and knowing the value of accounting. One of my mantras is documentation, documentation, documentation. And the person with the most documentation wins. And this, of course, from my banking days, currently as a financial advisor doing financial planning with business owners, and I'm also a consultant with the SBDC. The documentation that the PPP, your bankers, anybody, it's always about knowing those numbers. So I grew up in a family-owned business. I've been there, Lauren's been there. We're both now have our own practices, and really just want you to know that not to focus so much on where you've been, where you're going to go. Today's webinar, we're just talking about being in the now. And some of you may have actually been fortunate to have some new opportunities, new business opportunities, and that's great. But really the foundation is, of course, coming from people dealing with numbers, is what do your numbers, what is your cash flow, where does it come down to play? So having your team of advisors, which includes, of course, your CPA. I always say send chocolates because they are your most critical. Lauren, if you like something else other than chocolates, that works.
That's great.
But your banker, your financial advisor, your insurance agent, your lawyer, that's your team. And the SBDC really as free services that Angela mentioned, we're here for you. So keep those advisors. We're your support team, and we will get through this all together. So Lauren, if I could ask you, maybe share a little bit about your family-owned business and where you've gotten today in the love of financial accounting.
Sure. So, hi everyone, I'm Lauren Kmetz. I'm the owner of Antora CPA. I am a proud Colorado native. I went to CSU for my business administration degree and CU Denver for my master's in accounting. And I love our beautiful state, so I didn't stray too far. Like Karen said, I grew up with parents that are self-employed, and they might think, oh, you grew up with self-employed parents, so that made you want to start a business. It's more like, despite the trials and tribulations that I've seen them go through as business owners, I still had that itch. I have important work to put out into the world, and so here I am doing that work. So for me, the drive to start this business came from when I was in grad school, getting my master's in accounting. I had a professor slip into our required reading some personal finance education, which people think is so funny that accountants don't get that education in school, just like most people don't. So it took, a bunch of 20-somethings for a professor to be like, learn this information. This is so important. So I really took that to heart. We obviously learned business finance, but when it comes down to managing debt and saving for retirement and just managing your grocery costs, nobody learns the stuff in school. So that's where I really educated myself on all that information and implemented that, put that into my own life, paid off $50,000 of student loans very aggressively, and just continued to save. And as I was working, I started at one of the big 4 accounting firms. I was at PricewaterhouseCoopers, paid off those loans, saved up a lot of money, and I decided to pull the plug and start my own business in 2018. And here I am, being able to serve clients for both tax, accounting services, and other financial support to help them not be a slave to their business, but to help flourish, keep more profit in their pockets, less to the IRS and to the state, and more for them.
Wonderful. What would you say, just as a foundation, as a business owner, that we and other business owners is so critical? Just some basic accounting philosophies could you share with the business owners on this webinar?
Sure. So for me, planning throughout the year is of the utmost importance. Accounting is historical. So when your tax preparer is going to do your tax return in April, for example, we're basing that on information that's already happened. We're going back to things that are in the past. So we need to touch base throughout the year while things are happening so that we can take advantage of tax optimization strategies. We know what you can spend money on, what you can invest in, what not. So that's my biggest emphasis as small business owners, is to meet frequently with your professionals so that they know what's going on in your business before it's too late. I hate being the bearer of bad news. Most people hate hearing bad news when it comes to taxes. So if we can know and plan for that up front, it becomes less of a catastrophe and maybe just more of an inconvenience, if anything. And yeah, that's my biggest philosophy.
Yeah, I would obviously, I'm in the planning stage as well, and so many business owners by just seeking out some of that assistance and asking those questions, it can be less costly, it's less stressful, and it gives you a bigger opportunity, even though tax laws change all the time. But another mantra of mine is, it's not how much you make, it's how much you keep. And in some cases, there's time frames you can do things. And so, you know, with a business owner, when they're trying to figure out, again, today, where they're at, trying to figure out, that planning will come. Maybe today's not that essence, but what would you say are maybe your recommended top 2 or 3 items for a business owner to really focus on to strengthen their business?
Yeah, so the biggest one we talked about at the beginning was the documentation. So record keeping is going to be your best friend. And in today's age of technology, we can automate as much as possible and have that as a time saver. So for example, you can through QuickBooks, whichever QuickBooks service or many accounting services that are out there, you can sync your business bank accounts right to the feed, and it'll automatically go into the QuickBooks, and it just needs a reconciliation every month to make sure everything is accounted for correctly. But it's a very simple process where you don't have to enter in every single transaction you have. It's already done for you. Another one is in terms of receipts and invoices that you are expected to have copies of if you were to get audited, for example. You don't have to have a shoebox full of receipts. In fact, please don't. So there's great resources for that as well. So like there's apps that you can get through your accounting program. You can just snap a picture. If you go to lunch with a colleague, write on there what you talked about, snap a picture of it. It's saved into QuickBooks or whatever system you use, and you can crumple up the receipt and throw it away. And you don't have to have massive piles of records. Everything should be kept electronically, nice and organized. So that's all going to set you up for success to get your taxes done. And like I said, worst case, if you got audited. Second thing, like you said, circling back to your team of professionals. There is no cookie cutter CPA or financial advisor or anything like that that is going to be perfect for everyone. And find the ones that you connect well with, that you're comfortable talking to. All these things are super important. So if you don't have that, seek one out. Talk to friends, just interview some and find the people that are going to be best for you. And a team that can work together is going to be in your best interest. So for example, Karen and I can sit at the table and we can all have this conversation and we'll kind of give checks and balances, right? Someone comes up with a strategy we want to use, like, oh, we're going to sell a rental property, we're going to take a distribution from a retirement account, and then I can let you know what the tax implications are going to be so that all together we can have a great plan to move forward. And then lastly, I would say, because we are numbers people, let us do the heavy lifting when it comes to the numbers, but don't be afraid of the numbers, because some of this is really simple math. It's addition, subtraction, like it's elementary math. So don't be afraid to be able to get comfortable with your financials. Know what your profit and loss looks like. Know what's on your balance sheet. And have your team of professionals be able to ask them questions of, what does this mean? What does this look like? Why am I not as profitable as I thought I was? These kinds of things. For example, I just spoke with a business owner last week who, he says, I go into my QuickBooks and there's account line items on my P&L that I don't know what they are. He said they're things that I don't use. I have a service account in here that I don't do that service. And so if that's the case, if you pop into your financials and you're like, I don't know what this means, don't be afraid of it. Go ahead and make changes. Talk to your bookkeeper and say, you can make it the way you want it to look that's useful for you. Because if not, what's the point if you can't monitor how well your business is doing?
Fabulous. Those, the biggest thing with the business owner and the business that you have, that's your passion. That's what you want to do. Your passion is not the numbers. We get that. But understanding that and really from a macro aspect, just those ABCs and actually not just be, and you hear this all the time, not just working in the business, but work on the business, your structure, and get that team together. So I think those are some really good macro tips for how accounting can actually be your friend. Yes, it can. And I personally will only work with strategic CPAs because it's not the past, it's where you are today, but more importantly, where do you want to go in the future? And what happens with your business when you retire? What does that all look like? So those are some great macro elements, Lauren. Thank you. What if we kind of roll into some of the microcosms of this PPP and maybe some of the things where, of course, Congress just passed and it changed, the rules changed again, kind of like the tax code. But could you maybe go through some of the items that have recently changed with the PPP, at least as an overview? And if any of you here have some specific questions, Lauren, I'm sure will be willing to answer those later on.
Sure. So I want to give a little background of the timing, just so everyone understands where the different rules and regulations have stemmed from and the changes. So first, this came from the CARES Act that was passed at the end of March. Congress was trying to give relief to small business owners and incentivizing businesses to not have to lay off their employees, keep people paid. So as quickly as that was passed, we were left with a lot of questions. We still are, but so they had released some facts and questions and more guidance in the following weeks. So we had some interim rules released in May, and then we got the forgiveness application was finally released, so then we could see, okay, here's what we actually need to have this be forgiven. And then just 5 days ago, we had the Flexibility Act passed that loosened the restrictions on how we can spend this money and still qualify for forgiveness or partial forgiveness of the PPP loans. So before I dive into the PPP loans, I want to touch on a couple of other resources that are available that haven't gotten as much coverage in media and maybe other.
Good.
So the first is the employee retention tax credit. And to be clear, this tax credit cannot be claimed if you're taking the PPP loan. You can't do both in this regard. So be aware of that. But if you have not gotten the PPP loan, this may be a good option for you. So what this is a refundable tax credit, meaning it does not need to be repaid. And it is up to 50% of $10,000 in wages paid by an employer whose business is either fully or partially suspended because of the virus, or whose gross receipts declined by more than 50% in the same time period in 2019. So we do have some restrictions on who's qualified to take it, but this is a 50% credit of up to $10,000, so it could be a $5,000 credit per employee. And how this works is you get to claim this right on your 941. So our second quarter 941 vault should be released in the next few weeks. Will be modified to account for this credit as well as the deferment, which we'll talk about next. So whichever one you're doing, work with your payroll provider, because this is going to be very important to not do incorrectly, because it's your employees' money. But you can actually get this money right away by not paying in all of your employees' withholding. So you can actually claim that right away, and you get to keep that now and not pay it into the IRS. so that you can get immediate funding by basically not paying in that. Like I said, please check with your payroll provider, make sure that's done right, because you don't want to just keep your employees withholding. So the next I want to talk about is the deferment of payroll taxes. This can be combined with the PPP loan. That's a new change with the Flexibility Act that was just passed on Friday. And so what this means is that the employer portion that the employer pays on behalf of the employee for their Social Security, that can be deferred. You don't have to pay it in quarterly. So half of what you defer will be due at the end of 2021, and the remaining half will be due at the end of 2022. So you have quite a long time to pay that back. And another note, you can do that with the PPP loan and still get full forgiveness. So just make sure to track all of this in really good detail so that you know what you paid, what's been deferred, what you still owe. That's all going to be very important.
Documentation.
So, yes. So diving into the PPP loans themselves. So there's a lot of definitions and calculations that we're still getting clarification on. But let's talk about these new changes with the Flexibility Act. So the biggest one is that the covered period, which was 8 weeks from the date of disbursement, is now changed to 24 weeks to spend that money on qualified expenses. So that's a much longer time frame. It's going to give us some relief to use up those funds. Also, be aware that there's an alternative period. So if you are on bi-weekly or weekly payroll, that you can start that clock, the covered period, starts the next pay period, the first day of the next pay period after you receive funding. So the next change will be one of the safe harbors. And so we can just address that term real quick, safe harbor, of what that actually means. So a safe harbor is just a provision to the statute. There's safe harbors for many different laws, and they're riddled through the tax code. So it's just kind of an alternative to say you didn't meet the intended criteria of this, but here's an alternative for various reasons that you can still qualify to meet this. So the safe harbor for this new Flexibility Act is going to be in terms of the reduction of your head count. So in my opinion, the primary purpose of the PPP loans was to keep people that are on your payroll, keep them paid, not have to lay them off. And if you did have to lay them off, to hire them back as quickly as possible. That's the original intent here, and you're incentivized to do as much to qualify for forgiveness of the loan. But they understand that there's many situations that have happened that are not allowing us to hire people back. So we've got several options here that we can still qualify for. So the biggest one is going to be how we account for a full-time employee. So we're using this acronym as FTE, which is full-time equivalent. That is one FTE is a 40-hour-a-week employee. The safe harbor allows you to say, well, what if I have part-time employees? So I need part-time employees that are less than 20 hours a week, count for half. So you can have 2 part-time employees equal 1 full-time employee. So when we're talking about reinstating our head count and what those numbers look like, multiple part-time employees can count for a number of full-time employees. And understand that there's some other provisions that if your employees don't come back for a number of reasons, so if they voluntarily resigned, or if they voluntarily requested a reduction of hours, if they were terminated for cause, if for the safety of your employees and owners and customers, you could not have as many employees on location, you can justify that. You will not be penalized for reduction of headcount, and some other reasons. So if you have a question of, you know, this happened, so I can't. Another one is if you can't find a qualified person to rehire. So example, if you had to lay someone off, you gave them an offer to come back and they declined, that also counts. So make sure you have all of this documentation in writing. So if you've got emails back and forth with the employee, keep all of that to know what the headcount actually was and what qualified.
Would you, Lauren, recommend that business owners do email more than having personal phone calls just because of the documentation aspect?
I would, and you can do both. You know, if you have a phone call, if someone just says, hey, I'm not coming back for whatever reason, maybe ask them to, you know, send you an email, follow up, or maybe even write out a letter and to say, hey, can you sign this real quick? And that may be tricky with seeing people in person, but having as much in writing as possible is going to be very important. So continuing on to our other changes here. So our date to re-establish our headcount was previously June 30th. And that's one of the reasons we wanted to talk about this today, because if you needed to, you know, hire back employees very quickly by the end of the month, that you'd have a little time to do that. But this new act extends that to the end of the year. So, okay. And that's basically reestablishing your headcount as it was on February 15th of this year. If you're a seasonal business, then you can also use an alternative period for comparison, basically this time in 2019. So we do have until the end of the year to rehire if necessary. And then another big one is the percentage of how much of the funds need to go towards payroll. That number was previously 75%, and that's now been reduced to 60%. So that 60% needs to be payroll, so gross wages and salaries, and also includes health benefits to employees and retirement contributions on their behalf. And then the remaining 40% can be spent on business mortgage interest, lease, and rent. And that includes lease of business equipment. And it could include a business vehicle if you've leased that. And utilities. Utilities will include everything you'd normally think of: water, electricity, gas, trash, security systems, all that kind of stuff that you would normally pay.
Do you have that document, Lauren or John? Is that something that can be put on the screen for everyone to kind of see?
So I don't know how to share my screen, but if everyone,
I think
it's there to download.
I think John needs to do that.
Well, it's there to download. Everyone has access to it. It's the PPP Loan Document Checklist in the handout section on the right side of your screen. So if you download that, there's just a list of documents that you may or may not need to apply for forgiveness. So the most important ones are going to be your payroll documents, your quarterly 941s for the periods that we're talking about, your state unemployment record, so your SUTA, record of the retirement plans, contributions, and health insurance payments, and then written documentation of all the things we talked about. If employees are leaving, if you've had to fire them for cause, written support for all of that. So to back up a second, the banks themselves, your lender is the one that's going to approve you for forgiveness. So they may ask for more, they may ask for maybe not all this, but I think the more information you have clearly documented, the better chance you're going to have at forgiveness and a nice smooth process there. So if you're going to claim your rent and lease payments, you would need to have been in that lease before February 15th of this year. So I would include a copy of the lease agreement and the monthly statement or invoice showing how much was charged. Same for your mortgage payment, the statement showing that. And a loan amortization schedule might also be a good idea, so it clearly shows how much of the payment went towards interest, because the principal amount does not apply for forgiveness. And then a list of utilities, your telephone and internet. Gas can also include transportation of a business vehicle. So that's all there. I hope that's useful to you, and at least when we're talking about being in the moment, it's, there's so much uncertainty going on. What can we do today to reduce some of this headache? What can we do now? And it's start pulling these records and have them in good shape for yourself.
Yeah, the other thing too, Lauren, is just the overall tax deadline of April 15th. I'm assuming that most business owners know that that has been extended. And so it's really to, I believe, take away a lot of stress. But I want to caution, which I'm thinking you'll agree, this is just deferring. It's not changing, what the liability is, or still the responsibility and requirements that need to take place, right? It's all just simply deferred till later.
Yes, you mean on the income tax side? Yeah.
Yes.
So
and even with the PPP and things like that.
Yes. Yep. So July 15th is the new April 15th this year. So if you did not file your 2019 taxes yet, you still have a little time to get that done. That's for individuals. So partnerships and S corporations were due March 15th. So if you still haven't filed, we can get that done for you. And another note on the documentation. So from the beginning, they've said that this loan and the forgiveness are not taxable. It's not taxable income. But the expenses that qualify for forgiveness are not going to be tax deductible on your 2020 tax return. So that's another important thing to have very clearly identified within your accounting system. So there's a couple different ways to do it. Some people have recommended
Yeah, I was gonna say, Lauren, can you just repeat that whole thing all over again, that what's taxable versus non-tax deductible?
Yeah. So when you receive a loan, any loan, we'll just take a very small step at a time. When you receive a loan that's not income to you or your business, and this PPP loan, if you qualify for forgiveness and you don't have to pay it back, that's still not going to be income to you that you have to pay tax on. But these expenses, so the payroll expenses, the rent and the mortgage, utilities, those expenses that qualify for forgiveness are not going to be counted as an expense on your 2020 income tax return. So you will not be able to deduct them. So some people are trying to petition Congress to make another change on this, because they're almost saying, like, you said it wasn't taxable, but if you're not allowing us to deduct the expenses, it almost is taxable. So there may be a change on that, but how it is right now is you will not be able to deduct those. So we need to clearly know, when you work with your tax preparer to do your 2020 tax return, that they know what's been forgiven, or what has been qualified for forgiveness through the PPP loan. And so a couple of different ways you can do that. In your accounting system, you can use classes. So you can have your bookkeeper set up classes to show these are the expenses that we paid for PPP that got forgiven. A simpler way to do it is, if you go into your chart of accounts, you can label on your different expense line items. So you say, here's utilities, and then here's utilities forgiven for PPP. So very clearly that you can just see in there, or one expense that says expenses for PPP loan that were forgiven, just so that when we go to do the tax return, it's less of a headache and we know what was forgiven. So
yeah, that documentation will really be critical. And I think perhaps when, Lauren, you're going to have a very specific just PPP webinar coming up, because again, for those of you who don't like numbers, if you can't deduct all those expenses, then guess what? Your profit's going to be higher. And so therefore that tax liability, as much as you're not being taxed on that loan income, which isn't income, but so I would think understanding when do you expense something against that versus taking that employee the tax credit and offset. So that's something in the next session specifically, I'm sure that you'll be covering, right?
Yep, and hopefully we'll get that on the calendar in the next couple weeks, so it's nice and timely for everyone. But that's an important thing to weigh, like you're saying, is I think the PPP loans and the EIDL loans, or what some people call the grant, have gotten so much attention because people are like, oh, it's free money, and which it kind of can be, and if you look at it in that lens, but so can this employee retention tax credit can also be considered free money. So which is better for you and your business? We really have to run the numbers. We won't know until we sit down and look through it. So both great opportunities.
What about the whole forgiveness time frame? Have they not also extended when you can apply for this? And maybe do you have some recommendations? If somebody's ready and meets their numbers, should they just go ahead and apply for forgiveness, or should they wait? Can you talk about that a little bit?
Absolutely. So they did extend the time to apply for forgiveness. I believe it's been extended to 10 months after your covered period ends. So 10 months after the 24 weeks is up. However, I would not wait that long. If you qualify for free, like as soon as you qualify for forgiveness, as soon as you spent out all of the funds and according to, you've reestablished your head count to an adequate amount, as soon as you've reached that amount, get your records together and put your application for forgiveness in with your lender. One, you'll get the stress off of you. You'll get a big thing off your plate, but maybe even more importantly, once you've qualified for forgiveness, that loan will be off of your balance sheet. And if you need to apply for additional funding throughout this year or next year, we don't know what's going on. If you need another loan you need to apply for, having that off your balance sheet will make your financials in better position and more likely to qualify for another loan. And you don't have to apply for forgiveness. Some people are saying, I got this loan, I need it, and the terms are at 1%.
Right.
If you need funding after June 5th, the term extends to 5 years. So, you can't borrow less expensive money than that. So if you need it, so an example could be like if you owned a food truck and you had to lay off all your employees and it's just you cooking food for people, and you're like, I need to spend this money on inventory to keep my business alive, then do that and keep the loan and pay it back at 1%. So again, the decisions are very individual, but talk to someone and figure out the best plan for yourself.
So one thing, Lauren, is I've talked with different businesses across very different industries. I always ask, because I'm a strong believer in having, professionals that really know their stuff as expertise. A lot of companies only have a bookkeeper. And so I've recommended finding a CPA. Can you kind of talk a little bit about maybe what the expectations or the costs of actually obtaining a CPA? Some of my conversations, business owners thought it was way more expensive than what it was. Could you kind of go over that for those businesses who only utilize a bookkeeper?
Sure. So an accountant, a CPA, these are kind of broad terms, and the service that you get can vary widely. So for a tax preparer, I recommend that you work with either a CPA or an EA, which is an enrolled agent. So it's anyone that's been identified by the IRS as someone that's, acknowledged that they've got an education level. We have continuing education requirements that in the eyes of the IRS, they are designated to be a preparer. So that's my first piece of advice. In terms of what other services they're doing for you throughout the year, beyond just getting a tax return done, can be very extensive. And this is what I was talking about earlier in meeting frequently. The value of that cannot be emphasized enough, of having someone that you can pick up the phone and call or send an email. It's like, hey, I have a question about this at any time. Like you can't get that from H&R Block, not to undermine any of them or TurboTax, but to have a real person that you can bounce ideas off of in your business is invaluable. And when the expectation is that you're going to meet quarterly or multiple times throughout the year, you know that your business is on track. Or if it's not, you have someone there to help keep you accountable and say, you had this goal this year, we're not making it, what can we do to change it and get you on in terms of the profit that you wanted to make this year, this quarter. So in terms of costs, like based on the service you're getting, varies. And I think having an all-inclusive annual package that has full price transparency, meaning upfront you know what it's going to cost you, is very important, because a lot of accounting firms will charge on an hourly basis. Law firms also do this. So it could be, if they say $200 or $300 an hour to do your tax return or to consult with you, that may mean nothing to you, right? Because you don't know how many hours it's going to take to do your tax return. So that can be a big mystery to you of what your final bill is going to be. So I think I'm getting on an annual package, which will vary based on the needs of your business. So if you need bookkeeping done, that can also be included in your annual service. If you're an S corporation, you obviously have another tax return that needs to be done, same with a partnership or C corporation, but there's more work to be done because there's an additional tax return. So those packages can vary from maybe $1,400 or $1,500 a year up to maybe $4,000 to $5,000 a year, depending on what you need. But I would say a smaller business just starting out will definitely fall into that, $1,400 a year range if you don't need extensive services. But as your business grows, it could cost you a few thousand, but it's definitely not into the $10,000 a year range or anything like that.
So anywhere from $75 to $100 a month. That they could budget, knowing, even the $1,400, but when you break it down, $75 a month or $100 a month, that might be taking somebody out for dinner or what have you. So thanks for that insight. I do want to check if there's any questions that have come in, John, that perhaps Lauren could answer. Anything in particular?
Hey, I'm coming on. Thank you so much, Karen and Lauren. This has been a really great presentation. And yes, there are a few questions. So let's see what's come in. One question that gets repeatedly asked, and you did touch on it, but just to make sure if there's any resources that people could look at or points of clarification, people are asking what specifically counts as a utility under this PPP forgiveness, and is there a resource? A lot of folks have expenses that they're trying to shoehorn into that category, and how is that going to be enforced? Any insights on that?
Yeah, so the ones I've listed on that checklist are the ones that I have seen documentation from the SBA and in these acts that will be qualified. If you want to be a little more aggressive and try to include costs beyond that, you can certainly try. And if your banker doesn't approve you for forgiveness, we can work around that. But so those are the main ones. I've got telephone, internet, your water, electricity, gas, and also gas for business vehicles, security systems, trash, waste management. Another thing to note is if you claim the home office deduction, so you would have had to claim it on your 2019 tax return, you can use some of that expense, so a proportion of the home expenses, and claim that for forgiveness. But if you just started in 2020 working from home, as a lot of people did, that will not qualify. So you would have already had to claim it in the past.
Excellent. Another question, if I accepted grants, is that taxable?
So the grants, a couple that I'm familiar with were the EIDL, which is the Economic Injury Disaster Loan. That was $1,000 per employee. That is not taxable and did not need to be forgiven. There's a few other grants that local jurisdictions are giving, local cities and counties. And as far as I know, those are also not taxable.
Okay, great. And this question is maybe a little cheeky, but what if I don't have the money to hire a CPA? Can I do it myself? Do you recommend that?
You can. So it's one of those things that you get what you pay for. So there are good programs out there. TurboTax can work for plenty of people, and especially if you're in a lower income, that's kind of all you can qualify for. It could work for you. So just know, and I think it depends on what your intention is. If you are looking to grow your business, take it full time, increase your profit, then it's an investment that's worth making, of having someone to get your taxes done correctly so that if and when you get letters from the IRS, it's not so catastrophic, and someone to support you through that growth process and help you save tax dollars, any number of benefits. So the answer is yes, you can do it yourself, but of course I would recommend working with a professional.
Yeah, Lauren, if I can add too, is I think you really hit on the investment into yourself and your business and paying yourself back. Even though I feel I'm very capable of doing my own taxes, and I'm not that complicated. The more complex, most definitely. But I'm constantly amazed. I don't keep up with tax changes. And the amount of deductions and credits and things that my CPA has been able to find for me far exceeds the cost that I have paid. So yes, up front, it seems like a pretty big cost, but as your business gets more complex, And there's a lot of different CPA levels out there, very expensive, and those that really want to support small business. So look into it for yourself. You might be surprised. It's not as expensive as you think it might be.
Fantastic. Well, I think we're going to wrap things up. So for the audience in your chat panel on the screen, make sure that you do download the handout from this show. And it'll only be available for the next few minutes. Once we close down the webinar, it will disappear. So make sure that you follow that link and save it. If you need a copy, we'll also be attaching it to an email follow-up from this webinar. The video will also be posted to our YouTube channel tomorrow, so you'll be able to watch this presentation again and get a second look at all of this knowledge. A few other announcements that we have. Yeah, Karen.
John, I was going to say, for some of us who are a little bit more technologically, if you don't know how to get it, you click on the orange arrow and then it will drop down, and the PDF for PPP Loan Document Checklist looks like it's about the 4th or 5th item under handouts. If you don't see it, the little arrow on handouts, click on that and it'll be a drop down. So you can click on it, save it onto your laptop. I know the first time I had to do it, I freaked out, and then the webinar was over, and then I couldn't get it. So for those of you who are challenged like me, that's where you can find it. So I admitted my technological challenges. I deal with numbers and money, not tech. It's my husband's job.
You betcha. It's, this webinar platform is almost magic. You just need to know how to work it a little bit. Let's see what else. We have a new webinar series coming out tomorrow. It's called Market Matters, and the SBDC lead consultant, Adrian Hovey, my brother, is going to be co-hosting this webinar with me, and we're going to take a look at the market and how the national economy affects small business. So you can join us at 11 o'clock. The link to register for that was also in the chat panel, so you can find that. You can also find that by going to our website, northmetrosbdc.com. And of course, you can book an appointment for consulting with Karen or Lauren on our website. That link I put on the chat panel. And please visit AntoraCPA.com as well. That's Lauren's site. If you don't have a CPA, hopefully this presentation has convinced you that it's really smart. It's really smart. Any final thoughts from you, Lauren or Karen?
I just want to say thanks for having me. Excited to be here, and wherever you're at on your journey, if you're just starting a business, which is really exciting and uncertain, or if you're an existing business that's just trying to stay afloat this year, use the resources that are available to you, like the SBDC, get free consulting, get these credits and loans, whatever would help you survive and hopefully thrive through this year.
Yes, I just ditto on that, and really hats off to Angela Atkinson, who's the new director. She's not that new anymore, but really looking to be very progressive with programming. And over the decades I've been in business as a banker, I would recommend business owners to the SBDC. And unfortunately, so many businesses don't realize these are your federal tax dollars working. This is a free service. And Angela has really brought on, I like to think I can hold my own, but John and Adrian and Lauren and the other consultants, we're free. Utilize them. Know that we are here to help you, and there's great more programming to come that Angela is working on. So bookmark the website and continue to know that we're here to support you. And yes, you do create the economy. Small business is what makes the world go around.
Couldn't have said it better. Thank you so much, Karen. So northmetrosbdc.com. We'll see you there. Thank you very much. And signing off for Talking Business.